Hey everyone, it is Evan here from the Trade Risk on Friday, November 1st, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So we're going to jump into our dashboard to kick things off here. It was a strong week for equities, major indices all finishing higher to close out the week on their highs. S&P all the way down to the Qs, IWM Dow, all finished up about 1% or greater here on Friday. And you can see the 5-day change numbers all firmly in green territory, about 1.5% on average. We are above all of the key simple moving averages in the major indices. We're above last week's highs, and we're getting a lot of new all-time high closes right now. If we scroll down and take a look at what's helping lead this market, it is biotech now at the top of the list for this week. IBB at the top, followed by healthcare and semiconductors. On the downside, we have transports, which are in the red over the past 5 days, energy, and utilities. For major markets, natural gas up almost 10% over the past 5 days, followed by the S&P 500 and TLT. Pretty unusual there to see TLT right alongside SPY here after along with this broad market rally, but it is in there coming from a bit of some oversold levels, but still interesting to see it still up strong this week. Volatility, USO, and high yield actually on the downside this week, all underperforming. So sort of an interesting spread here when we take a look at the major markets. If we jump into the charts, though, and take a look at the S&P 500, this is the weekly time frame. This is where we like to start our analysis and get that big picture view. It's the cash market. Each bar represents 1 week worth of trading. So when we look here at the S&P 500, first and foremost, you can see just a very strong close on this week. This is the second week in a row that we're finally back to sort of closing at highs. Remember a few weeks ago we talked about all the tails up here on these weekly bars, never finishing the week strong. Well, for the past 2 weeks now, we're getting those strong closes, and it's coming at an important time because we are now breaking out to new all-time highs. So one of the big questions we had last week was, as the S&P 500 was just about to test and as it was testing all-time highs, we were looking to see, could it get follow through? Could it get confirmation and sort of confidence by the bulls here that this breakout is in fact underway? And I think this week certainly solidified the stance there that this market is in breakout mode, as there's a flurry of individual stocks and individual ETFs that are all starting to break to new multi-year highs, or in a lot of cases, all-time highs. Now, the great part about breakouts and moving to all-time highs is that you have a very defined spot to measure risk against. And in this case, it is the new all-time high record of about 3,028. That was approximately the highs back here in July. We nearly tested them again in September, and that is what we just broke out from right now. So if you're an active, if you're a shorter term trader, if you just want to be a little bit nimble right now in terms of risk and sticking with this trend, I think you have a good line in the sand, 3,028, or call it this week's lows. If we lose this week's lows, if we start closing back below this range here, or back into this range here, that's when you might want to start to get maybe a little suspicious, maybe raise some cash, maybe put on some hedges. It all depends on your strategy. Maybe you're doing that now preemptively. I can't speak for everyone in their individual approaches to the market, but I think from a technical analysis perspective, this is an important level to pay attention to. Now, that's all the good, lots of good this week. The downside, or the worry, the concern is we have now covered quite a bit of ground here in a short amount of time. If you really just look at the past 5-6 weeks now, I mean, we arguably have ran in about a 6% move in the past 4 weeks. If you want to take it from the past from the week prior, we're up about 7.5% in a pretty good straight shot. We did have a little bit of volatility. We did chug around here a little bit sideways, so it wasn't just straight up. We did grind along kind of sideways and then break out, and then grind sideways and break out. But we are, in most metrics here, a little bit stretched, a little bit overheated, a little bit of froth here in the short term. So as we talk about this line in the sand here as a good measure to sort of views. I wouldn't be surprised if we kind of came back and kind of shook things out and tested this next week. And I think the character of that test, again, will be important to kind of pay attention to. So all in all, a great stance by the bulls this week, pushing us to new all-time highs across many markets. But we do have to just remember that we have now covered a lot of ground. If you're chasing here, if you're loading the boat here, again, it depends on your time frame, and you just need to be thoughtful about where we've come from in this move and where you're looking, where you expect it to sort of go. If we look at volatility right now, I always pull up this incorrect VIX chart. When we look at volatility here, you can see that it is back down to the lower 12s. Notice we basically closed right where we closed on Wednesday of this week. So the market is actually breaking to new highs. It's making progress to the upside, but you can see the VIX here is clearly near its lows, but it's not, it's not breaking to new lows here relative to earlier this week. And if we were to look at the volatility of volatility, I know this gets a little bit crazy here, but if we look at VVIX, which is essentially measuring the volatility of volatility, you can see that this is off of the lows here as well. We got as low as about $84. We're a little bit above it right now. So some traders will look at this as possible kind of divergence here, and this would be sort of negative divergence because there's still kind of a bid out there or interest in protection even as the market moves up to these new all-time highs. So, to each their own on how much you want to read into this. I think ultimately a VIX at 12 just gives you a landscape and an overall environment that is kind of in line with trending markets and a market that isn't pricing in a tremendous amount of movement and fear out there right now. But again, if you're a contrarian, if you're looking for some short-term plays, maybe you want to fade that type of move. So that is the landscape there. Let's take a look at the Russell 2000. The Russell 2000 here is back to the top end of this range. You can see here now, if we zoom out, it's been going sideways here for over a year now. It is back to testing 159. This basically is the battleground here. This is, it's not all-time highs in the IWM. It's not an all-time high retest, but it certainly feels like one. It's sort of the Super Bowl of kind of resistance here that we're all waiting to see now if the IWM can actually break out. Again, it has covered a lot of ground. If you just look at this kind of straight line move, 8.5% rally from the bottom end of this range to the top end of this range. So it has, certainly spent some energy getting back up here. Be interesting to see in the next week or two how it reacts around this 159, 160 area in the Russell 2000. Last but not least, if we look at the NASDAQ 100, you can see again breaking out here, very strong finish at all-time highs for the NASDAQ 100. If we take a look at the composite, because I know that was a little bit behind, let's see how that finished out. Yes, it did make new all-time closing highs here, the NASDAQ composite on Friday. So all in all, that's the landscape there. Rally mode is on, strong finishes, but let's be careful of that complacency, and let's measure and let's understand sort of where we've come from in the market. So let us now jump into some other major markets here. We'll go to TLT, which was up 1.5%. Take a look at the volume that came in. So kind of back to an average volume there. We engulfed last week's range, which basically means we started the week lower with a gap down in the TLT, but we effectively rallied all week, and now we closed, not near the highs, but still pretty strong here, which says, suggests to us that, maybe this is kind of a higher low or sort of a double bottom here to the September lows. Interested buyers around here, around these mid or upper 130s. So a little bit of a stance there, and again, a good spot to measure risk against as well. If we're holding above these lows here, then looking for that bounce or move back up into this range seems reasonable for TLT. If we go to gold next, you can see this here also trying to make another run at the upside. We talked talked about this first sort of breakout attempt last week. It was faded early this week, and then we rebounded here into the end of the week. So if we sort of clean things up here again and we look at, say, the weekly chart of gold, you can see that this has been in consolidation mode for about a month and a half now, and you can see actually a little bit longer than that. And you can see now it's starting to attempt to lift higher here. So long-term trends still look good here in gold. This consolidation might turn into a continuation pattern. The jury's still out, needs a little more proof, but a good stance there by the gold bulls. If we go to silver next, silver you can see here is basically in the same kind of shape here. It's trying to round out this consolidation. It had this great move in the first half of this year. It's been consolidating for about 2 months now, starting to lift back up, MACD in positive territory. So bulls starting to reclaim this trend and push it back up to these old highs from a couple of months ago. Now, if we go to energy, energy next here, if we look at USO, this did get a nice rebound here on Friday, did help support that sector of the market as well. This was selling off into the start of this week, but you can see again, we did get a nice recovery here. We still finished down a little over 1% on the week, but it was a nice save here. Again, you get a nice potential higher low to use to measure risk against, which would be Thursday's lows. We had good volume come in on Friday, so the short-term trend does remain higher there. Natural gas also getting continued surge here in activity to the upside. This was really kind of a breakout week for natural gas. You can see it was up 9.6%. It had been going sideways down here. Take a look at the volume on the weekly chart as it charges up here. So definitely a good look by natural gas. You know, we were talking about it in this consolidation. We're talking about this rise in volume here, and it is now reacting to the upside and getting that upside breakout. So for the short term, a little bit of rejoice here for the bulls. Longer term, of course, this thing is still a mess, but right now it's in a nice short term sort of rally mode. Next up, if we take a look at sectors, last but not least, we take a look at some of the top performing sectors and worst performing this week. IBB was at the top of the list, up 4% on the week. You can see moving back quite a run here. If we just measure the distance here, it's up about 13.5% in about 3 weeks worth of trading, maybe closer to 4 weeks worth of trading, but still a very impressive move here from IBB coming back into this prior sideways range. There's this level here that the market did care about several times back in 2018, 2019 as well. We topped out here in June. So it does look like perhaps a retest of that 111 area, approximately that zone. It is stretched here in the short term, but MACD continues to make new highs. The momentum's there. The trend is there. So a good little squeeze going in biotech. Now, interestingly enough, we also have gold miners at the top of the list this week. We have the GDX. In fact, this is the GDXJ. For some reason, I don't have GDX on the chart. But if we look at the juniors anyway, you can see we're starting to get a resolve here outside of this lower high consolidation. We had this little pullback here throughout the course of September and October. We got nice and tight in here, kind of a 3 drive pattern, starting to break out to the upside. Good some volume coming in, not huge volume, but we had a day or two of, or at least this day of high volume. MACD moving back in positive territory, so it does seem like gold miners want to kind of come back up here and move back into the recent September highs. Last but not least is healthcare. Healthcare getting some good volume coming in here. This has been fueling up for quite a long time. This is a big consolidation pattern. If we go to a weekly chart, you can see just more so the sideways kind of price movement going on here all this time. We're starting to get a good surge now to the upside. Looks like it kind of wants to be in breakout mode, start a bigger trend for healthcare. So good progress there out of XLV. Now on the downside, everything was XLE was negative here on the 5 days. So this was the worst performer this week was XLE. It did get a big pop and a save here into the end of the week. We had a nice 2.28% close here up on Friday, but you can see again, it's still kind of working itself higher. We talked about it in, I think it was last week's video about this kind of lower channel that it's been in, this longer term channel it's been in. It's one of the worst performing sectors this year for the market, and it is still showing that at right now. If we look at utilities, this was number 2 underperformer this week, second largest underperformer this week. Really not much to say about it. Still just kind of going sideways here. A little bit of consolidation is certainly warranted after the nice run. It's just under all-time high, so not reading too much into it. And basically, staples are in a very similar situation. They're trading just under their all-time highs. They started breaking out much earlier than the market, consolidating a lot through time here and kind of digesting the early gains from the past several months. So wouldn't read too much into this one as well. Still looks like it's in a pretty strong spot, both XLU and XLP. So that's it. That's what I got for this week's video. Thank you, as always, for tuning in and watching. You can subscribe on YouTube or follow us at The Trade Risk. Have a great weekend, and we'll see you back here on Tuesday of next week for the midweek market recap video.